Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with your resource, Northwestern Ohio, for a common sense approach to planning, uncomplicating the financial world. He is president and founder of McIntire Retirement Services. Chris McIntire here with us. Chris, welcome in.
Hey, good morning, Peter. It's nice to be with everybody. And nice thing about having three different offices is we get to record from different locations. So we have different backgrounds every week for those that watch us on the podcast.
Giving us a tour of all of the offices here virtually through the magic of the radio program and technology. You get to be with Chris in each and every office here on the program. And if you go back through the programs, you can get to see a few of his different offices throughout Northwestern Ohio, as well as his new home where we were recording for quite some time during the midst of COVID, Chris, and of course still in the midst of COVID here, but trying to get back to a routine where at least on some days we are back in the offices.
Yeah, it's certainly been a challenge here this year, and with the spread of COVID all over the place, Delta variants, and it's certainly a serious issue that, a lot of us have had to adjust our livelihoods and our lives, thankfully, we don't miss a beat. We've got a pretty good sized client base, but, your heart goes out to the nurses and everybody that, they're doing the overtime with full, intensive care units and all of that. So thank you for everything all of you medical professionals do for us.
Absolutely. And when we are thinking about COVID, it actually fits in with today's topic, Chris, scary financial topics. We are in October. Well, we are in the fall months, and as the seasons turn and the leaves turn, and especially with this month, the ghouls, the goblins are, of course, everywhere. But we are going to talk about some of the topics that scare us from a financial perspective. Number one on that list, Chris, might be the simple act of trusting an advisor or trusting someone else with helping us to make financial decisions and then trusting them with our money. I know that a lot of people are very hesitant to do so, reasonably so, but you have been there, operating McIntire Retirement Services, helping countless individuals and clients making better financial decisions. Talk to us a little bit about the act of interviewing an advisor and maybe what we should be looking for or asking in order to begin to establish and build that trust and know that our best interests are being looked out for.
Yeah, when you mention the best interest, that would, one of the questions is, are you a fiduciary, and what does that specifically mean? So, we have a fiduciary responsibility to act in our client's best interest, which simply means, in layman's terms, they pay us to help manage their assets. We don't get paid by, mutual fund companies, big brokerage firms, that type of thing. The clients actually pay us. In our world, they don't pay for any transactional costs. That would be a conflict of interest. And, if there was a conflict of interest, then obviously you would have to explain that. So, I guess an example would be a conflict of interest. If I wanted to buy Walmart stock personally, but wanted other clients to sell it, that's obviously a conflict of interest. So,
Interesting. And there have been times in the past where we have found that there were conflicts of interest. But more importantly, Chris, I think that there are some advisors out there that don't necessarily have that fiduciary responsibility. And we've got to know and understand that difference. And so it is a question to ask probably any advisor that we are interviewing right up front, is if they have that level of responsibility to their clients.
Yeah, probably one of the most important questions. And that's one that we get quite often. And, people will say back, I forget, whenever Bernie Madoff was running his Ponzi scheme down there, that was the question that you would get in every interview for about 2 years is, how do I know you're not the next Bernie Madoff? And, Bernie had a fiduciary responsibility to act in his client's best interest, but so sometimes even the best laid plans come to fail. Now 99.9% of the time in our world, you're working with upstanding people, but it doesn't mean that it's somebody who chooses to be a commission-based advisor, is choosing funds that pay them more commissions versus the highest rated mutual funds with the low expenses that typically a fiduciary is going to want to pick, because that's a win-win. Clients make more money, advisor makes more money. Where if you're a commission-based advisor, then typically the performance isn't that big of a deal because you got paid on the day of the sale, so to speak.
There's a series of commercials out there, Chris, that I think are misleading in the way that they try to create a false distinction. And the language of them is that at our firm, we only make more money if you make more money, where at a typical brokerage, they get paid whether you make money or not. And they try to create this difference and this distinction when, in fact, those two sayings mean the same thing. With a fee only or a fee-based advisor, their compensation is going to go up as the value of your account goes up, and therefore your interests are aligned. But you also want one that's not going to push you to take higher and higher and inappropriate levels of risks just so they are potentially making more money.
You're correct, Peter. And I think in the environment we live in now, which is so politically charged, you have to be able to talk clients off of the fence, if you will. Some of them say, look, I just want to go into cash. I don't like the direction of the country. Last year during the election cycle, a lot of folks like, look, I just think the market's going to go to heck in a handbasket. And it did not. It went up significantly during that election cycle, which was, obviously challenged and, not to make light of it by any stretch, but, it was a headline making kind of election last year, and yet the market still went up. And, here recently, we pulled out of the country of Afghanistan after 20 years, and, we can probably call into judgment the way in which it was, troops and personnel were extricated from Afghanistan. And it doesn't feel good emotionally, but does it really impact us from an economic standpoint? No, it does not. But I think it does adjust. People have to adjust their psyches accordingly, that, some of the news didn't look good and whatnot as we, left that area after a couple of decades there.
Well, I think that all of these things, Chris, are the scary financial topics that people have on their minds. And the news media tends to center around the scarier financial topics. And you, as the advisor, you have the difficult task of trying to navigate these things and help your clients plan for long-term outlooks and for long-term financial success, despite bumps in the road and things that may occur. However, I feel like there is a lot of fear-mongering out there. I've talked to a number of people recently that have shared what I'll call scare tactic marketing, where they say the government's going to confiscate my wealth and you should be prepared for that. I talked to them about the fact that I don't think we're going to have a full-scale, wholesale confiscation of wealth like the island nation of Cyprus did back in 2013, but rather inflation and taxation would be our methodologies for a broader wealth confiscation, so to speak.
Yeah, that's a great point that you bring up. And, we've had a lot of folks over time that said, I think they're going to try and come in and rob my 401k. Some folks are concerned about their long-term pension funding, and that is certainly a rational argument because some pensions are, drastically underfunded throughout the United States. But, the government, doesn't have the ability to come in and seize your 401k. In fact, IRAs and 401ks have a lot of protection from creditors, from lawsuits, from bankruptcies on their own. I think it's, some of the conspiracy theorists, ideologies out there that, that grabs headlines, it gets clickbait, if you will, and gets people to, to log in, look at a website, sign up for a newsletter, that type of thing. My wife's done with social media, and I very rarely look at it anymore. It's just, it's too negative for me. And I think maybe by and large, a lot of us would do better without it. Anyway.
Indeed. Yeah. And I think you're exactly right when you say the clickbait. I think that is unfortunately, in many cases, what people fall into, and believing that it is news when it's nothing more than that clickbait. So we're talking today with Chris McIntire, president and founder of McIntire Retirement Services. And ladies and gentlemen, as you navigate what are realistically very scary financial topics, you need to have a level head. You need to have a good understanding. And many times it is beneficial to work with the help of a trusted, experienced, qualified professional advisor. Chris McIntire is here to provide that service, to provide that guidance and perspective. And if you would like to get a plan put together, or if you'd like to double check and review your current plan, get that plan completed, he does offer the opportunity for a complimentary review and strategy session. All you need to do is pick up the phone and give a call, 800-868-1194. That's 800-868-1194. 800-868-1194. 800-868-1194. Now, Chris, Dave Ramsey has this list of questions to ask a financial professional. And we've taken a look at this. What I find striking is the premise when they framework these questions, and they say that they've conducted the largest study of millionaires ever conducted in the history of the country. And they polled those that have achieved the status of millionaire. 7 out of 10 of them do work with a financial professional. So that would tend to make me believe that there are benefits there, and those among us that are financially successful see the benefit in working with a financial professional.
Yeah, correct. And sometimes, Peter, the term financial advisor gets thrown around very loosely, where, my technical title is an investment advisor representative. So we do give investment advice. There are certain, people in the brokerage world that are commission based that are not financial advisors. They're just registered representatives of the firm that they belong to, and they cannot give investment advice or tax advice. They can sell product. So, a big distinction there. We help folks with tax planning, with estate planning through attorneys, with our long-term care planning, with investment planning, income planning, and investment advice. So we are, of the true advisor designation there. So again, it's kind of like calling everybody a doctor when not everybody is necessarily a doctor, supposedly.
Now, what's that old movie where where they get into the tent and they're all looking at each other? Doctor, 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 doctor. Yeah, no, not the case. And likewise, equally in the financial world, not everybody has that same title, nor does it mean the same thing. And that's why I think the waters are muddied, and we need to clarify those, and we need to find out what role and what specific responsibility the advisor that we are talking to does have. Because, Chris, even with similar designations, not all advisors are everything to all people. Certainly there are specific advisors that sort of have a specialty or have a niche in the financial world, if you will. There are some great accumulation advisors that help people while they're working to grow their assets that may not make that transition to retirement. That model might not translate so well.
Correct. Yeah. And, in our world, we utilize the insurance industry, we utilize Wall Street, in better times, we'll, obviously advise on banking instruments that are out there, and better interest rate environment is what I mean by that. And like Peter said, there are, certain advisory platforms that have a disdain for the insurance industry, and, specifically on the annuity side of things. And, we can't name names here on the radio show, but most of you have heard the news articles that, you should never own an annuity. It's like, well, when the number one concern for American retirees is running out of money, a lot of people probably would do better with one than without one. I'll say that.
Well, again, if you would like to get that kind of perspective and guidance on what to do, how to make that transition, how to position your money, your assets to help you achieve future financial goals, to make the financial world a little less scary, Chris McIntire is here and can provide that guidance and perspective. You can learn a little bit more, keep that open mind, and find solutions to help address the biggest issues on your mind. 800-868-1194, the number to call. That's 800-868-1194. In fact, Chris, I recently had a conversation with some investors, pretty astute folks. They definitely were in that millionaire club. And they said, our advisor has done a good job in helping to recommend investments, but has never even talked to us about the tax implications of our money or our finances or our planning. Right now, a lot of people are pretty scared, pretty worried about the direction of taxes into our future. And that's probably an indicator if that conversation has been absent or missing or overlooked. That's probably a pretty strong indicator that we need to be proactive in addressing that aspect of our planning.
Well, Peter, Roth IRA conversions is probably one of the biggest areas that advisors miss advising their clients on. And it's something that we've been doing here as we're working our way into the fourth quarter, where Roth IRA conversions would be, this would be the time of year where you would want to be doing those. And the reason for that is because most of you know what your income has been up until this point and what it will be until December 31st. So you can work with your tax planner, your investment advisor to, make a determination. How much more money can I pull out of an IRA, convert it to a Roth IRA, and not go into a different tax bracket is kind of the generic explanation there. Keep it simple on the radio for our listeners today, Peter. But, this is the time of year that we're doing a lot of that for our clientele. And, the idea is not to pay the highest tax rate possible. It's to pay the lowest tax rate legally allowed.
And do you feel like considering those Roth conversions for many savers and investors today is going to be a money saving strategy in the long term, Chris? I know there's a little bit of cost up front to doing it. I mean, we have to pay the piper and taxes will not be avoided. But do you think by being proactive and looking at that in today's tax environment that long term it is a money saving opportunity?
I'll say it this way, Peter. In 1986, if your income was above $68,000, you were in the 38% tax bracket. In 2021, you have to have income over $600,000 to be in the 37% tax bracket.
And that wasn't even the highest tax bracket at that point in time. There was a 50% bracket. Today, that 37% is our highest bracket.
That's correct. And there are some additional taxes for, Obamacare and those things that go into high net worth individuals. We won't get into today, though.
So, I mean, that's just 35 years ago. Many people who are retiring today or in the midst of early retirement, they were beginning their careers under those circumstances. And so the premise of delaying and postponing paying the tax on their retirement dollars, tax deferred accounts and 401ks and IRAs, Chris, it probably was the right way of thinking because tax rates, tax brackets have come down significantly. But looking where we are today, if we want to continue to be proactive planners, we talked about how there's probably not going to be a widespread wealth confiscation, but the reality of it is that the government doesn't need to shutter bank doors and take portions of our wealth in order to collect more of it. They could just incrementally raise tax rates over time, and the $30 trillion that are currently in tax deferred retirement accounts, the net effect is that they've confiscated more of those dollars. And I think a lot of people are worried about that. And right now, Chris, we know what tax rates are. Probably a good time to address that scary topic.
Yeah, especially between now and 2025, when the tax cuts that President Trump had put into place will expire or sunset, if you will, which is very common with tax legislation. It's often not permanent, just for a period of time. And then I think most of our listeners would agree that, with the amount of money that has been spent here on coronavirus relief and then all of the other pork that goes along with, massive amounts of government spending, that's the nature of it. Sorry, guys, that's the truth of it. Governments only raise money by doing two things: cutting spending and raising taxes, or not raising money, but how they control their budget is, by raising taxes. And as government has gotten bigger and bigger and bigger, it costs more and more. And then, everything they want to do for everybody, that they can't give it away without taking it from someone in the first place.
I saw a scary chart, Chris, from the Federal Reserve Economic Data. You can go to FRED, Federal Reserve Economic Data, and they've got a chart for the amount of currency in circulation. 20% of all of the dollars that are currently in circulation, Chris, were created within the last 18 months. Now, maybe they didn't take it out of John's pocket to Peter's pocket to pay Paul, so to speak, but they have printed, they have digitized, they have created more. And the net effect of that is the watering down of the value of all of the other dollars that were previously in circulation. Inflation is the net effect. And that's another scary financial topic. We are seeing it. We are dealing with it. We are battling it. I don't necessarily know if that's something that's going to slow down anytime, Chris.
Well, yeah, Peter. I mean, we've had a very long period of time where inflation has not been much of a threat, and it clearly is now with the price of food, the price of oil, some of the other commodities. Lumber has come back down recently from, as the supply chain catches up. But, if you look at the amount of freighter traffic that is bogged down in ports trying to get goods off of, out into circulation, it's still massively behind. I mean, try to get a new vehicle right now. I mean, that jacks up prices of things. So inflation is a real threat. I mean, let's be honest. It's not 2%. It's more like 5.5%, 6% right now. And is wage growth up 6% to make that a net effect of zero? And that's where, it really affects the lower income folks, like the retirees, obviously, that live on more of a fixed income. If their income is not going up by the same rate of inflation, they are losing purchasing power and losing, the value of their dollars.
Now, that being said, Chris, I did see another interesting way of looking at inflation. Not necessarily the number of dollars it costs to buy a specific good, but the amount of hours we would have to work in order to buy a specific good or specific item. And for many of the staple products, the number of hours we have to work in order to afford them are about what they have been on average over the last 30 to 40 years, or even below it. However, prices in the market are significantly inflated, and the number of hours that it would take to buy essentially what the price of the S&P is, for instance, is a multiple, an exponentially higher factor than it was 10 years ago, 15, 20, 25 years ago. So the prices in the market really seem to have inflated maybe faster than the price of the goods that we are paying for.
Yeah, exactly. And I think you're referring to like the price of corn, the price of oil over time is relatively stayed the same, whereas the price of buying the companies that make up the S&P 500 has, extrapolated, 10, 12 fold very easily. Yeah. So you're exactly right, Peter. It's, inflation has a number of different aspects there. It's not always the food in front of you, but, it can affect your investment, like home prices. Look at where they're at. Stock markets at record high levels right now. What would it take to buy all of the companies in the S&P 500 today versus 30 years ago? How many hours of effort? And you're exactly right. Another way to measure inflation, if you will.
Well, I think that leads to another one of these scary financial topics, and certainly something that are on the minds of savers and investors, which is the possibility, Chris, of a market correction. And we know these things happen. They're a natural course of the business cycle. And in fact, over the last 100 years, we have seen 14 different significant market corrections. They happen on average about every 7.25 years or so. And we have not seen a true market correction. The coronavirus downturn, that was a health-related scare, a healthcare-related correction, not a true economic correction. But people are worried that the market, hey, it's at this all-time high. It has been at an all-time high year after year after year for the last 12 years or so. If if we see a market correction, Chris, we don't want a significant amount of our wealth and our savings and our financial security just washed away. And so are you hearing about that concern, and how are you helping your clients to address it?
Yeah, certainly are, Peter. And, this is typically the time of year where there's more volatility than other times of the year, where some companies have, drastically missed their economic projections. And this is when they pay the price for that typically. But yeah, a lot of our folks are concerned because we have not had one of those healthy corrections. And again, healthy markets go through cycles where they're expanding and then they can contract and we can go up again. This one here has been, this rally so fueled by just government spending and then the opening of the economy, from the first wave of COVID to, okay, hey, is, this Delta variant going to have more of a negative impact than what we thought, and look at the airline industry, for an example. They obviously have taken a little bit of hit here, second half of 2021, and we'll see how things go here with, as this Delta variant has played some havoc with things for sure. Kind of that stay-at-home stocks have done better than travel and leisure sector by all means.
Indeed. Once again, ladies and gentlemen, we are talking with Chris McIntire, Northwestern Ohio. He is your resource for a common sense approach to planning, as you can hear each and every week here on Your Game Plan for Retirement. But you can also take advantage of what is the true value of being tuned into this program, the real opportunity to get an individual financial and retirement planning review and strategy session. If you would like to take advantage of this offer, a complimentary time to sit down to discuss your goals and to map out the plan for how to make your money help you work to achieve them, pick up the phone and give a call, 800-868-1194. Give a call, 800-868-1194, 800-868-1194. That's 800-868-1194. You can also visit online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. As you speak of the healthcare crisis that we went through with coronavirus, Chris, there's one that's still lingering. It was here before coronavirus. It will remain after, and that is the number of people, unfortunately, that are going to need some form of long-term care or extended medical care, and how ill-prepared we are for not only the care, but the cost of that care. That is another scary financial topic, but we can plan proactively for it.
Yeah, you're hit a home run right there, Peter. I would certainly agree that the number one lacking issue for most retirees in their retirement planning is in what happens if they had to go into like a long-term care type facility or even pay for home health care. This has hit home for us over the last couple of years, personally with a father-in-law and then a friend that we take care of. One of them has a plan in place and that plan covers 100% of the bill. The other one didn't have any plan and took everything that he had ever saved for. And then dealing with all the government entities, the Department of Family, Family Services, all the government entities that call you back whenever they feel like calling you back versus dealing with an insurance company that handled all the headaches. It's just a remarkable difference. And, just to have it play out right in front of us at the same exact time probably makes us a little more passionate. But, you've worked awful hard for your money. Why would you want to risk having to spend $100,000 to $150,000 a year on something that typically impacts 50% of American retirees?
Well, again, we are talking with Chris McIntire today about some scary financial topics, and certainly have covered a number of them. Simply the act of trusting an advisor can be unnerving. Taxes, inflation, market corrections, long-term care. And yet, Chris, in survey after survey, it shows that the number one fear of retirees is simply outliving their money, outliving their assets, something that we can absolutely plan proactively for and address in those planning efforts.
Absolutely. It's the number one concern, and it's probably the biggest thing that we do for our clients is ensuring that they have guaranteed structured income for as long as the husband and the wife are alive. We truly feel that is in clients' best interest. To have that threat taken off of the table as early as possible, and then build investment portfolios for the growth, have an income portfolio for again, that guaranteed structure of income there, and, give people some peace of mind. That adds to your quality of life. That helps you weather some of the financial storms that always are bound to come through when dealing with stock markets, bond markets, and the real estate markets. They've all had their ups and downs over the years. So why not hedge that risk, cover the basic living expenses, so when things get bad, you've already got a plan in place for that.
Well, if you would like help, if you would like assistance, if you'd like to formulate that plan, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. You can also visit online, McIntyreRetirementServices.com. McIntyreRetirementServices.com. We covered a lot of scary issues on today's episode of Your Game Plan for Retirement. They don't need to be scary issues, though, ladies and gentlemen. They will be things that we will have to deal with. They will be prevalent. We will continue to have market volatility, and taxation and inflation will be issues, but you can plan proactively with the help, with the guidance and perspective of a qualified, experienced advisor. Chris McIntire is here as that resource for you. Give a call, 800-868-1194. I know he's looking forward to hearing from you soon, helping in any way he can. Chris, always appreciate the guidance and perspective. Thank you for being here on Your Game Plan for Retirement.
It's always my pleasure, Peter. Everybody, thank you for listening, and stay safe out there. Have a good weekend.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.